Hey guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about Marathon Digital stock. This isn't going to be a fun one. This video is going to get a lot of hate. So if you're just here to hit the dislike button and comment something nasty, just go ahead and do that, then click off. But for the rest of you that actually want to watch this and see my due diligence to come up with your own opinion about the company, I invite you to stay for the whole video. And if you are new here or returning and not yet subscribed, please subscribe down below. But let's flash back to last year, one of my old videos that I posted. I was wrong. I guess it was actually 2 years ago, but I made a video titled Mara is a Complete Fraud. This was a very bold video to make because at the time, Marathon Digital stock was trading at over $60 per share. This ended up getting 15,000 views, and I've noticed recently it's getting more and more views as Bitcoin mining stocks become more and more popular again. With Bitcoin mining stocks, they're always cyclical. Sometimes they're in, sometimes they're out, depending on how the price of Bitcoin is doing. But because this is a 2-year-old video, and because people are looking into Marathon Digital stock again, I wanted to revisit this video. And honestly, going into this, I thought that today's video was going to be me walking back a lot of the claims that I made 2 years ago about Marathon Digital. And unfortunately, as I rewatched that video, a lot of the stuff I talked about ended up coming true. Now, I'm not going to get into all of it in today's video because today we have a lot to cover already. But if you want to go watch that video, click on the top right-hand corner. I'm not saying I was right about everything, but a lot of stuff in there I was right about. Just as an example, I called out the bull crap on their Hardin, Montana facility. And you know what? The company completely moved out of Hardin, Montana. Now, about a year ago, I did make a follow-up video on Marathon Digital, and I discussed one press release in particular, this one here. Applied Blockchain secures 200 megawatt 5-year hosting contract with Marathon Digital Holdings. The press release is a good one, sounds great for both companies. Now, the concern that I saw was that Applied Blockchain is not a healthy company at all. At the time of this video, you can see it on the screen. I'll try and make it more clear for you in this video, but at the time, the company had cash and cash equivalents of basically $41 million, and they had negative working capital of $6.3 million. If a company has negative working capital, it is a very unhealthy company. And even better, Marathon Digital in their own press release provided some more color on this on July 18th of 2022 if you want to go back and read this press release. But they said, Applied Blockchain's facilities are currently under construction, and based on the construction schedules, installation of Marathon's miners are expected to begin at the facilities in the fourth quarter of 2022. Yada, yada, yada. But they're signing this agreement with a very unhealthy company who has yet to even build the facilities that they need in order to be able to host Marathon's Bitcoin miners. This is very, very concerning. So, flashback, I said, negative $6.3 million of working capital and just over $40 million of cash. What does this company look like now? Well, according to the most recent quarterly report that Applied Digital put out, they are a public company themselves. As of November 30th of 2023, this company had unrestricted cash and cash equivalents of just $9.2 million. That's down from over $40 million. And they now have negative working capital of $166 million, up from negative working capital of what did I say, $6.3 million? At the time, I thought Applied Digital was a very unhealthy company. Now it's even worse, and Marathon has continued to work with this basically bankrupt company. According to their most recent Bitcoin monthly mining update, they're still hosting their miners with Applied Digital. It's called Applied Digital now. They changed their name from Applied Blockchain. But they have 3 different facilities with Applied Digital where they are mining Bitcoin and Applied Digital is hosting their miners. Obviously, this is very concerning to me, and it should be concerning for any Marathon Digital investor as well, because over half of their current installed hash rate is with Applied Digital, who is basically a bankrupt company. And the other host they have is US Bitcoin, which, if you didn't see this morning, a short report came out for Hut 8 Mining where US Bitcoin was involved, and US Bitcoin is another bankrupt entity, essentially bankrupt entity. There seems to be a lot of fraud involved with US Bitcoin. So both of Marathon Digital's hosting providers are essentially bankrupt entities. And why this is so concerning to me is because if we look at Applied Digital's revenue breakdown, their revenue from contracts with customers, they get 70% of their revenue from a single customer. Customer A. Who could this customer be? Well, we know because of an interview that Applied Digital's CEO made on September 21st of 2022 that this customer is Marathon Digital. He says in his interview, they will become our largest customer, and they're the premier company in the United States as far as miners go. So this 70% customer is Marathon Digital. So I think it's fair to say that without Marathon, Applied Digital would be a bankrupt and defunct company. This doesn't even stop here. This gets even more concerning to me. I believe, I'll just say it right now, I believe that this agreement between Marathon and Applied Digital is Marathon's way, or at least it was their way, of shifting debt onto another company's balance sheet in order for them to appear asset light. That was a big part of Marathon Digital's pitch, is they are asset light. They don't own any infrastructure. All they do is mine Bitcoin, and they pay a fee for other people to host their Bitcoin miners. That's the company. We are asset light. It reduces a lot of risk, they said. But does it really reduce risk when both of your hosting providers are essentially bankrupt entities? I don't think so. But right below this revenue concentration breakdown, they talk about deferred revenue. As of November 30th, the company had $52 million in deferred revenue. So this $52 million is cash that Applied Digital has already received from its customers. But Applied Digital still has their performance obligation. They've already received this cash, but they have not performed the services yet. So companies are prepaying Applied Digital for services that Applied Digital will do in the future. Now, if we switch over to Marathon's most recent quarterly report, they break this down for us. The company contracts with other service providers for hosting of its equipment and operational support in data centers where the company's equipment is deployed. These arrangements also call for advance payments to be made to vendors in conjunction with the contractual obligations associated with these services. The company classifies these payments as short-term prepaids and long-term deposits on the condensed consolidated balance sheets. So Marathon Digital is prepaying Applied Digital for the hosting of their Bitcoin miners. And if we scroll up on Marathon's quarterly report, you'll see this. Long-term deposits right here, $57 million. And then I'm guessing the other portion goes under prepaid expenses and other current assets, $36 million. So me being me, I was more curious about this contract between Applied Digital and Marathon Digital. Specifically, I wanted to know how much Marathon Digital had to prepay and how far in advance they had to make that prepayment. Anytime you have a contract like this come together, 200 megawatts, especially of this size, companies should file with the SEC. They should include in a Form 8K this contract and the obligations and the contingencies and the covenants of this contract. So I went and looked. I went to Marathon's SEC filings, and to my surprise, there aren't any 8Ks that were filed around the time of this press release. But I dismissed it, knowing Applied Digital is also a public company. I went to Applied Digital to see if I could find this SEC filing. And again, it's nowhere to be found. So even if I wanted more information on this contract, I can't get it because it doesn't exist. I can't find it anywhere on the internet. This is a contract that is invisible to the public. We don't know what contingencies or covenants. We don't know how this contract is set up. We don't know when Marathon is supposed to prepay and how much they're supposed to prepay. So like I mentioned earlier, knowing that without Marathon Digital, Applied Digital would cease to exist, it really got me thinking, is this Marathon's way, or was it their way, of remaining asset light by pushing debt and interest payments and expenses onto another public company's balance sheet? Or I think best case scenario, Marathon realizes they really screwed up by signing this contract with Applied Digital, and they have no choice but to keep Applied Digital running. Because if they fail, half of Marathon's mining fleet is shut down, and it takes half a year, 12 months to get those miners to a new hosting facility. It takes time to buy a facility. This would delay Marathon tremendously, so maybe they're just biting the bullets, saying, yeah, we screwed up. We'll pay your bills because we don't want to take the fall for it. Because clearly, we know Marathon Digital has prepaid Applied Digital a lot of expenses, And yet Applied Digital only has $9 million of cash on their balance sheet. We can see it listed as 2 liabilities on Applied Digital's balance sheet. The first one, customer deposits, $37-ish million. Deferred revenue, $50 million. And because we know Marathon is this company's largest customer, we know that the bulk of the customer deposits and deferred revenue is coming from Marathon Digital. And because Applied Digital is not profitable and they don't have cash on their balance sheet, it is very, very possible Marathon Digital is fronting Applied Digital money to pay down the company's debt, because otherwise they wouldn't be able to. On Applied Digital's most recent 10Q, they gave us a breakdown of their debt that's outstanding. Starion term loan, Vantage Garden City loan, Starion Ellendale loan. Basically $43 million of debt sitting right here in these 3 loans. And you know what? Every single one of these loans involves Marathon Digital and where Marathon Digital has its miners hosted. Let's go back to Marathon's most recent monthly update. There's Ellendale, North Dakota with Applied Digital. There's Garden City in Texas with Applied Digital. Now, on March 7th of 2023, we got a press release that broke this down a little more. Applied Digital and Marathon Digital Holdings mutually executed the option for an additional 70 megawatts of hosting at the Ellendale facility. That brings the total up another 70 megawatts, and it brings the total for the company close to 500 megawatts. The Ellendale facility was financed through a loan agreement. The loan with Starion Bank, with terms including a principal amount of up to $20 million with a maturity date of February 3rd, 2028. The proceeds of the loan will be used to fund capital expenditures associated with the Ellendale build-out. Okay, so I wanted to see more information on this loan that was taken out. There should be an 8K filing with details on this loan that Applied Digital filed with the SEC for me to go look at. Yet again, it doesn't exist. I cannot find an SEC filing with these loan details breaking this down. Is Marathon involved with this loan? But to me, this looks like Applied Digital goes to the bank, says we have Marathon Digital as a major customer. They've committed to having their miners hosted by us. We're going to have all of this revenue coming in. What can you give us for a loan to do this build out? That's where you come up with this loan. And then you have, in a weird way, Marathon paying off this loan for Applied Digital because Applied Digital isn't making money, and Marathon Digital is fronting or prepaying expense to Applied Digital, which Applied Digital has no choice but to turn around and pay on these loans. So was this Marathon Digital's way of saying we're asset light, but hiding it? Having a different company take the burden of building out these facilities and owning these facilities so that Marathon didn't have to take on the debt. Based on the amount of business that Marathon gives Applied Digital, I actually think this is very likely. And remember, this used to be a huge spiel for Marathon Digital, how they were asset light. Look how quick they've flipped. They're now bragging that 45% of their mining portfolio resides on sites they directly own now, and 55% of which is hosted by third parties. And what did the company do? They acquired 2 of their facilities that they had their miners hosted at. They acquired a Kearney, Nebraska hosting site and a Granbury Data Centers hosting site, which again, if we reference Marathon's most recent monthly Bitcoin update, Granbury, Texas, they mine at Granbury, Texas, they bought that facility, and then the Kearney, Nebraska site that they acquired is probably included under all others on their press release. So very quickly, Marathon is turning away from being asset light, and they're purchasing these hosting sites. But they're purchasing them from USBTC, who is a fraud of a company. Now this morning, this hit piece came out. We can all acknowledge it's a hit piece. A hit piece came out for Hut 8 mining. The concerning thing here is it's 45 pages long. Even say a third of it is true. That is very concerning. And I guess I might as well include this in here. On January 16th, so just a couple days ago, Applied Digital signed an anchor tenant at its Ellendale HPC facility. Supposedly, this contract value is for approximately $2.2 billion, but guess what? Again, we don't have an SEC filing. We can't see any details on this at all. And this is just unbelievable. It's essentially a bankrupt company who has Marathon Digital paying to keep their lights on for them. they don't file when they should with the SEC. I'm just going to go out on a limb and say that this company is going to get in trouble at some point for not filing with the SEC. I don't know if I need to file the complaint. Maybe I will, but this stuff, it's a requirement. You have to file with the SEC when you have a contract or a deal that makes up, I think the number is more than 5% of your business. $2.2 billion for a bankrupt company. By golly, that's bigger than 5% of your business. A 200 megawatt contract with Marathon Digital. Both Applied Digital and Marathon Digital should have filed an SEC filing breaking down this contract, but nothing like that exists. And I think the reason I get so frustrated is because I believe so much in Bitcoin. I believe so much in this Bitcoin mining industry, but it is so ridden with fraud. It frustrates me to no end. I mean, Marathon basically paid to have Applied Digital's facilities built out, yet it's on another company's balance sheet because they want to claim that they're asset light. Something about that just isn't right. And man, I have to say that I think a lot of the reason the company is going to more of a diversified model or vertically integrated model, however they want to claim it is because they can see the bad news coming. They can see the bad news with both their hosting partners, that both of them are basically bankrupt. Both of them are basically frauds. Conveniently, they purchased both these U.S. Bitcoin facilities right before this HUD 8 hit piece came out, proving that USBTC is a fraudulent company. And boy, I just wonder how much longer this thing with Applied Digital can keep going. It is a very unhealthy company. The only reason it exists is because Marathon is prepaying its bills to it, and Marathon paid for the build out of these facilities. So I don't know. I've been rambling long enough, but this does not add up. Something is fishy here. Applied Digital, 70% of their revenue comes from Marathon. They have a ton of deferred revenue in their financials. Lots of related party stuff in their financials, which I didn't even get into. They had negative working capital of $166 million the last quarter and only $9.2 million in cash. And this is the company, Marathon Digital, the gold standard of Bitcoin mining companies. This is who they choose to host their Bitcoin miners with. And then Applied Digital's 3 loans outstanding. All 3 of these loans are linked to work with Marathon Digital. Marathon Digital has their miners hosted at these different facilities. So to me, it feels like, and I could be wrong, correct me if you see it a different way, but to me it feels like this has been Marathon Digital's way of pushing debt, pushing expenses onto another company, onto another company's financials because they want to be asset light. But yeah, I don't know. Just frustrated with what I found. I hope I'm wrong. Again, usually my research doesn't fail me. I hope it fails me this time, but gosh, this seems fishy to me. Marathon's been subpoenaed by the SEC before. I wouldn't be surprised if they get subpoenaed again with this. I hope everything is on the up and up at Marathon, but when I look at this stuff, it really makes me second guess investing in Marathon Digital. It's why I don't own Marathon Digital. Something doesn't seem right here. And quite honestly, the only company that I've looked into in the Bitcoin mining space that I can't find dirt on is CleanSpark. And that's the Bitcoin miner that I own. I'm not saying dirt doesn't exist. I've just yet to find it. You know, my investment could be the wrong investment. Maybe it'll end up being a better investment to own Marathon Digital. But if it turns out something is going on here that's nefarious, Marathon's going to feel some pain. And this really sucks. Really sucks because over the last 2 weeks, Bitcoin mining stocks are down more than 50%. This could mean this is going to be a really rough time period for Bitcoin miners. I mean, there's just too much fraud in this industry, and it bothers me. But anyways, I'm going to end this video here. Let me know your thoughts down in the comments section below. Again, if you're new here or returning and not yet subscribed, please subscribe. With that, have a great rest of your day. Keep 10 toes to the ground and your chin up. Stay blessed. Peace out.